All right, guys, we are live. I'm just going to open it up on another tab here if I can. And I will take plenty of questions from you guys tonight. Let's see if Bitcoin can form a nice little bull flag here and break higher while we're on the live stream. But we're going to talk about the risks, what is going on at the moment in the DeFi space, the good, the bad, the ugly, whether or not this is a bubble or this is the next big thing. So welcome to everyone that has tuned in. If you can smash that like button, guys, that does help everyone find these videos. We've already got 160 watching. This is going to be wrapped up by 8 o'clock because 500 of you are signed on to do the course with Troy and Kyle, who you guys know have recently. We've partnered up with them. We think they've got a lot to offer in terms of their style. So it's great. 500 of you, that is awesome. At least 100 or so of our members as well, they told me. So, okay, 200 watching. Guys, get a few DeFi questions ready. If we have time at the end, I'm going to take a few. But it's an update that I really want to get out because I see so many parallels of what was happening back in 2017, 2018, mistakes that people made, things we can learn from. We're going to talk about all that tonight as well. I might just bring up the Wall Street cheat sheet. Wall Street cheat sheet. Let's have a look at this one. We got a bigger one. That'll do for now. Okay, let's open that up in a new tab. And we're going to talk about where we are on here as well. You can't quite see the disbelief phase just behind me, but that's it's really important to understand. Thank you to everyone. We've got 64 who have smashed that like button now out of 240. Really appreciate that, guys. Yeah, I know this said 8 p.m. originally, sorry, but I did want to jump on now and get out of the way before Troy and the guys start their course. A couple other things we'll mention as we get into it. Synthetix has just touched $4 today, which marks a 100x return from when we first covered it back at 4 cents and first invested in it, which is amazing. I think Lend is the other one that's also just touched its 100x this week, so well done. It's probably something that I do want to dig into tonight as well. Really important to understand when we were buying these back here in the anger, depression. One of the most important things I want you to understand was what the influencers are doing now. They're all jumping on the wagon. What the projects are doing now. Everyone's jumping on the DeFi wagon. And so let's really dive into that. So we've got 300 watching. Thank you. We've hit 100 likes. I love it. I really appreciate that. Let's get into it. Okay, so here we've got just the 24-hour performance of alts, and this is in USD terms. So earlier today, these were even better against Bitcoin, and this isn't an exhaustive list. So a lot of these coins on Binance don't have a USD pair. So Syscoin, for example, I think was up 70%. That's on the day. So these are amazing returns. This is all of a sudden back like 2017, 2018 when alts are popping off and there's that real feeling of, well, what's next? People have got the fear of missing out, and there's so many that are now popping off that it's hard to stay in front of. So even for someone like me who does 16 hours a day researching alts, we're now to the point where it's almost impossible to stay in front of all the coins, and more so because they're not trading on fundamentals anymore. And that, again, is really important. Now, I hope this takes off. ETH is about to do the same. One of the things I've been talking about for our members and really focusing on in recent weeks is where's all this money going to go once people start to take profits in alts? Now, some alts are still going to go. Some alts haven't really run yet. And I think that's where we're going to see money rotate to. Litecoin's up 4%. We've had some news today that the Grayscale Investment Trust are launching a Litecoin product. I think BitMEX also put out another Litecoin product that you can trade. But the big news was Litecoin, Grayscale, there's another fund, as well as Bitcoin Cash. So you see that's up 3% today. IOTA is one that I've been drilling into you guys that I think it's going to play catch up. Cardano's been really strong, continues to do so. When we were getting a bit toppy on a few of these coins, Link, and we had these slight pullbacks when we get the slight bearish divergence on the charts, but then we just powered higher. And so that is a really good sign when we have a look at what I was looking at here at the time. So even with these divergences, we've still powered higher. And it was all about if we could get volume on the breakout versus if this is another breakout on low volume, we're starting to losing steam. So there's plenty of good signs on the good projects. It's been a long time since you can go down this list and just see a sea of green. Raiden, for example, one that I'm really liking at the moment. Why is that? Because it's still down 99% from its highs. Mainframe was another one I've been speaking about more recently. And I just want to get through a few more slides before we tie all this together. So to begin with, yes, they're popping off. It's great to get these kind of messages, and this is not normal. So just remember, if this is your first cycle and you haven't been here for the full boom and bust, and this is the first time you're starting to experience this optimism, belief, and thrill. I don't think we're in the complete euphoria stage. Maybe we're getting there for some projects, but people are thinking this is the new normal. DeFi, it's going to change everything. This is a new paradigm, and that's really dangerous once people start thinking those thoughts. So it is great, and this week we've probably had, if you've been in the group, you've seen a lot of people post these thank you messages. But I just want to remind people that this is not normal for coins to be going up hundreds of percent, every couple of weeks, thousands of percent. Make the most of it, but please stick to that plan. So what is the plan? Lock in profits, 10%, 20% a day or a week. If you've made life-changing amount of money, sell most of it. If you really believe in something long-term, never sell all of it, because they can keep going if they're a good project and do the Synthetixes, the lens 100x returns. So first of all, congrats to a lot of the members. We passed 2,222, or 2 for 22, as Richie Benno used to say. I've got a bit of a mouthful there. But now it becomes about the community and research and being in the right Telegram groups, the free groups. I'm not saying necessarily, if you can't afford the $50 a month to join our community, align yourself with the best podcast, the research, keep level-headed, because now it becomes really hard, and it's just a scattering of coins that are going to be popping off. And that's hard to predict, because it now becomes more about the influencers and the traders and key metrics. I'm going to talk to shortly. I'm going to talk to that about how you can look at the key metrics, but it's a lot of a different picture to doing the research that we've been doing through all of crypto winter and planting those seeds and watching the green shoots grow in time, and now they're shooting to the sky. What we're looking at now, when people want to know what's next, it's very, very different. Things are now trading on tweets, YouTube videos. There's money being thrown around at these coins for influencers to promote them. It's a very, very different picture. So I watched listened to a good podcast recently about the things that you can't program in or predict in any formulas about why coins or stocks or any investment pops off, or anything in life, in science. What are the metrics that you can't nail it down to what it is? So that's a really important thing to understand at the moment, with not looking for a reason on why a coin is popping off. And something might go 100% tomorrow, and there's no way to predict that today, because the trader on Twitter and the group that were tweeting about it, maybe it's a pump and dump, maybe it's some good news that gets leaked. And it's very, very different to long-term investing in, say, Bitcoin, or doing fundamental altcoin research. And I know it's really stressful because you feel like you're missing out and you want to know what's next. But I want to get to why I don't think it's healthy what's happening now. So a lot of the metrics are really strong. 3 billion locked in DeFi. The next billion here took 19 days. So we could be at 4 billion in a week from now. at the rate that we're going, and all this money that's pouring into decentralized finance, or open finance, I prefer to call it. But there's a lot of risk there. Every week or month, we've still found bugs in these smart contracts. A lot of the yield farming that we're getting to now is putting a lot of responsibility and security risk back on these teams, and we're probably going to keep finding bugs. And yet now we've got some huge pools of money there, and some of this is structural. Once that contract breaks, it can cause a house of cards and actually cause a cascade from the way that these things are built. So the smart contracts actually execute the way they're meant to, versus the actual bug or hack where money gets drained or stolen out of these contracts. Then you've got things like leverage and volatility. If the price of underlying assets moves too much. So there's so many different angles and risk, which we've spoken about. Watch the video I did with Kane in particular about yield farming and those risks. And that's, again, why Nexus Mutual, that's offering insurance, that project has been booming lately. It's had a big pullback more recently because they've changed their metrics and some of the rules around the funds and the insurance pools. But that's why that project has been so popular lately, because people are saying there's all this money. This is the sort of stuff that needs to be insured or covered. So just zooming out a bit and thinking about this from a macro point of view, and this is really important, this point that I want to get to. So everyone's been printing money. Philip Lowe, who's the Australian central banker, he's taken a bit of a different tune to the other central bankers that have been saying, we're going to print $1 trillion. Here's $3 trillion. We're probably going to do another $1 trillion next month. Negative interest rates, whatever it takes. He's been really cautious. And the RBA did a long speech today, and he basically said that he is not a fan of modern monetary theory at all, which is, in a nutshell, government spending into existence without even trying to sell bonds to the market or to the central bank, who just prints money out of thin air to give to them, or tops up their reserves. Someone pulled me up today. Technically, that's what they're doing. So why do they even need a top up of reserves? They can just spend money. That's what the modern monetary theory is sort of saying. But now, with everyone doing that, governments want to spend, central banks want to print, banks have got all these reserves now, are being told they don't even need reserves, just loan, just get money out there, lend to businesses. So there's all these different facets of ways that money can be created. We're seeing a huge explosion in M2, what we call the money supply in these different countries. But the RBA and Philip Lowe today, it's a really important point. What he's saying is that he's not considering this yet, which means that he's going to put his foot to the floor on money printing and interest rate cuts long before they'd consider anything else. And now, when you consider that I think we're about to turn down again, and he's telling you, well, we're not going to do this, he's basically saying, well, we're going to print a lot of money, and rates are at 0.25 already. So we're only one more cut at 0 or 2 cuts from negative, and he's kind of said he doesn't want to do that either. So that all that really leaves is printing a heap of money. Now, there's no point doing that, I don't think, because the government have already got a heap in reserves. They should be spending already. And this is why markets pumped today. And look, if you're not interested in the Australian stock market at all, this is exactly what's happening in your country. Fundamentals are almost out the window. That's all that matters at the moment. And I've said this so many times that when we get to these key levels, so on the Australian market at the moment, this is the XJO, the ASX, we're at this key level, the 61.8 golden zone. Members are sick of me putting these up on the charts. And you get to these key levels and the question becomes, are they going to print more money or not? No one cares about what is happening in the economy, in these businesses. How profitable are they? Victoria's just gone back into lockdown, and maybe New South Wales is seeing a little increase in cases. So businesses are going bust left, right and centre in Australia. They're about to taper down and cut off, the employment benefits like other countries are talking about. So there's no way that we should be positive and businesses are going to be earning more money. But none of that matters anymore because they're going to print. And that's why stocks are going up. That's why gold's going up. Silver has surged today. We might look at that later as well. But, okay, let's get it back to DeFi in this bubble. So at the moment, you can argue that stocks are in a bubble. Amazon, thousands of dollars a share. Tesla's gone from 200 to nearly 2,000. why does that matter? So a while back we did an interview about how stocks and values have basically, it's all become a bit of a Ponzi, because why do people even buy shares if there's all these tech stocks that are growth stocks that don't pay dividends? Why are people buying a share of that company? It doesn't give them a share of the profit, so it doesn't even give them voting rights in most cases, and they don't get a dividend, so they get literally nothing from that company, and the company can print more shares whenever they want. So that is what is translating now almost, I feel, into the crypto world and other parts of the investing world. So people can argue that, oh, these coins don't really have any value or revenue at the moment, but some of these stocks still aren't profitable in the tech space, or some of them don't even pay a dividend. So it's kind of like, well, why are you owning? What does a share or a token represent? And it's really become all about narrative and what they might do in the future. So we continue to see projects pivoting to DeFi and people jumping on the train. And I really want to highlight this point today, that some projects were already doing it. Some projects were in that space already but weren't calling it DeFi. Some are already going down that road on their roadmap. And then there's some that are just jumping on the hype wagon. So Thorchain, Aussie project, they would fall into the category of they were already doing this liquidity and cross chains before DeFi was kind of a buzzword. And now people are catching on that, oh, Rune token, Thorchain, they're doing this, they might be an integral part. Now, FTX, which have continued to be leaders in this space, that's why I support them, they've continued to partner with DeFi projects. They launched the DeFi index, but it's not just about tokens. They are actually integrating. So look for them to kind of integrate with the DeFi world. And they've been really active with governance tokens and voting on what they want to see happen. So this is the big opportunity for exchanges that in Sunday night's episode I spoke about how I see them becoming almost like crypto banks around the world. And they're integrating with all these stable coins in the world of decentralized finance for loans, borrowing and lending. And now you've got the digital pipes, flowing around the world, like I talk about with my digital thickshake theory. So forget the banks, we've been trying to borrow more money recently to, buy more property or build more houses. I don't want to sell my Bitcoin and Ethereum at these prices. And banks don't want to, really touch us or know about crypto. But think about being able to go to the market now and not only get that over collateralized loan. For the first time, I can go to the market and build a trust score. And people might say, oh, well, I know Nugget, or I know Nugget's news, I know his group, I'm happy to give him a loan that's, he only has to put up half as the collateral because they know that I can pay that off or whatever it is. So we're just going to be cutting banks out of the picture, which is truly, truly amazing. And this is the opportunity for all the exchanges to do that and keep integrating the best technologies. So another example of what we're seeing at the moment is just this narrative investing, whether it's Elon being popular and causing Tesla to go up, or him tweeting about Doge and Doge pumping. This is back to 2017 when McAfee would do the coin of the day. Another Aussie project, Loki, tweeted that they are pivoting to DeFi and the coin pumps. So look, they are a good team. They're probably a team that can pull it off. But again, you've got to be mindful of, well, who is jumping on the bandwagon? This is another example. Mainframe. As soon as someone told me that they've pivoted to DeFi, I thought, I'm not interested. They're jumping on the bandwagon. But then people told me, no, have a look. The Mainframe project, they actually shipped a working product and they just didn't gain traction and gain users. But they're a good team and they've actually replaced the CEO. I think they've got a new CTO. It was back in October when they pivoted to DeFi, 9 months ago, talking about this credit lending and unlocking way back in November, so before it took off. And that's they're the themes that I like. Then our friends over at Sentiment, which we'll get to, I look at these other metrics and it's down 96%. It's formed this long rounded bottom. That's tying the pieces of my cheat sheet of the fundamentals, the technicals, and then the psychology and the sentiment. And I think narrative fits in there as well. It's probably becoming a bit of a buzzword, but it's the most important thing at the moment. Narrative. What are these investors on YouTube and Twitter? What is the narrative and what are they thinking? And their psychology makes them press that button and press buy or sell at the end of the day, whether they're a trader or investor. And that's something that I've harped on about for years. If you followed me, you know that I've said psychology, sentiment drives all markets, and that narrative that creates sentiment is the most powerful thing in crypto at the moment. So here we go. Here's a good example of the other end of the spectrum where Tron has copied and pasted Uniswap, Synthetix, Filecoin, and Maker. So here you can see, Synthetix's platform. If you've been on it, what is Synthetix? And then basically it's the same thing they've copied and pasted on Tron. So look, if Tron has enough money, maybe they can start to use Binance and leverage and drop the word DeFi. Binance have recently got back into the IEO space. They tweeted that the other day, and I think I let you guys know straight away that I jumped on the computer, market buy, and Binance pumps. So these sort of things that you wouldn't have dreamt of happening in crypto winter, if you were here and you stayed with us, they're the things that are all moving the market. Now, when we have a look at terms like Bitcoin, Ethereum, and DeFi, no one's really been searching for Bitcoin much in the past 90 days, and yet the searches for DeFi still don't really even measure on this scale. So it's started to pick up, hasn't really ticked up yet either on the 90-day scale. So I guess that's good when you consider things, and it's still so niche. We can see a bit of an uptick there. What I would say is that people can't just log on to their CoinSpot or Binance and actually do the DeFi play of earning yield, which is what I want to get to next. How to look at all these coins. Now, CoinMarketCap can be a bit slow to list them all. They do have a DeFi section these days. I want to whip through this quickly, so I won't find it here, but I know that they do have a little DeFi section at the moment. But CoinGecko tends to be better for a wider range of coins. Let's just have a look at some of these 7-day performances here. And most of these are going to be stuff that's to do with DeFi in some way or another. But DeFiMarketCap.io is one that does just have the DeFi coins. Now, total market cap around 10 billion. So that is fantastic news. We've actually got close to all the projects on ETH surpassing ETH. Now, I think we are going to see a rotation and profit taking back into Ethereum because it is liquid. Look at the market cap of these projects. There's only one compound that's over $1 billion. Now, when you think about all the top tech stocks that are in the tens and hundreds of billions of dollars, that gives us a lot of room still for growth in that space. Now, the other thing that's super hot at the moment is staking. So that's one of the reasons Cardano's had a good run. This is staked.us. It's one of the services that will actually let you join and get a yield like Binance. So it's a centralized service if you're not nimble enough to figure out your own wallet. Here you can see the real yields when it takes into account what you're actually getting on top of the coins that they're supplying. So something like Synthetix has got a high nominal yield, but they're also giving out a lot of coins as well. So it calculates the real yield. And people fall into the trap of going, what is the highest yield coin out there? I want to buy that, but it doesn't matter if the price of a coin is crashing, okay? So that's one of the reasons that I think that large cap coins that offer staking are a really strong investment. That's why I think Ethereum is going to just have so much money flow into it when we get to ETH 2.0. Locked funds is another metric that people are now looking at. Well, how much money is locked in each of these protocols? What's undervalued? What's overvalued? I just want to rip through this quickly. These are the different lending assets and what you can get at the moment. Current rates tend to fluctuate a little bit. 30-day average, so lending or borrowing. Now, there's some platforms we can grab from one and then lend to another and earn the difference. A lot of these stable coins are the ones that are giving the highest yield here. So centralized platforms, sometimes they're offering more than decentralized platforms because they're giving you extra tokens that they can print themselves, basically. And this is why some of these yields you see are so high. They're falsely inflated because projects are giving you an incentive to create liquidity. So something like Curve at the moment is trying to build these deep liquidity pools between all the different stable coins. So you can go in and swap one for another. And so they're offering, high yields at the moment. Now, we're starting to see these platforms that'll let you do this. So all you need to do is get familiar with how to use MetaMask. There's tutorials on how to do that over on our website, nuggetsnews.com.au. Click on resources. You'll find the DeFi section there. Once you've got your MetaMask, you can connect that to your Ledger hardware wallet or some Ethereum in your actual MetaMask Ethereum address. Then you find these websites like pools.fyi or Uniswap, and you can add liquidity or remove liquidity. So they're starting to get these really easy user interfaces where you can head over and deposit different coins and choose the coins you want to buy and swap nice and easily on something like Uniswap or Kyber. Get the coins you want from whatever tokens you've got, like ETH, and then you can either choose to add liquidity, put those tokens into a pool and start earning that interest, or swap to other coins that are earning more interest. So how do I do all my research? Just wrapping up quickly here. Sentiment, I've got the paid premium version because obviously I do a lot of research. If you want a discount on their stuff, I think we've got a 10% discount for everyone over on our website, or a 30% discount for members in the discount section. But these guys have got all sorts of metrics, social volumes in particular. What are people tweeting about? What coins are getting held in addresses and being taken off exchanges? They're probably the top 3 metrics I would look at. We do all this work for you in the group. You've got things like realized profits and losses. So Glassnode is more for on-chain data, looking at who's moving and who's selling. Are people sending heaps of coins to exchanges to dump from the founders? That's the sort of things you want to look at. The TIE is another one I look at from time to time. They used to have more free assets. I'm catching up with Josh, who's the CEO here, soon, because I think he wants to work together as well. So that's how I'm tying together the on-chain data. This is the stock to flow I did on ETH recently, because ETH has just had a big move just this afternoon. It's finally broken 2%. This is the stock to flow model, where people don't realize this yet, but Ethereum is going to be more scarce than Bitcoin, and this regression line suggests it's going to be as scarce as gold, and that would give it a market cap around $2 trillion, $3 trillion. All else remaining equal. Now, obviously, there's a lot of things in play here. So just wrapping up, I mentioned that before. Look for coins that haven't just pivoted recently and jumped on the hype bandwagon. I think that the coins that have pumped really hard, people like myself are rotating into Bitcoin and Ethereum, coins that haven't pumped yet. Okay, if we break this downtrend, I think it is game on. And once again, we've got all the influencers jumping on things last minute. This was the time to be buying Synthetix at 4 cents or buying Lend. People now are jumping in and buying alts that have pumped 100x. Okay, that is not the thing to be doing. Influencers are launching their altcoin course. Join my webinar. Learn how to pick the next alt. Join my newsletter. Join my trading group. Okay, they were nowhere to be seen here. A lot of those guys became Bitcoin maximalists. Ian Bellina became a maximalist at the bottom of the altcoin cycle. So this is the Wall Street cheat sheet that I continue to talk about. The herd does the wrong thing at the wrong time. Every YouTuber out there this week is putting out top altcoin videos, top DeFi picks, next DeFi picks. Well, the fact is, guys, there's not the next, just like we saw in early altcoin cycles, there wasn't the next cryptocurrency, back in 2014 and 15 when altcoins exploded. Bitcoin was the best one. Then in 2017, we had all the Ethereum killers. Well, where are they 3 years later? Do any of the other Ethereum killers, the Neos of the world and Cardanos, do they have all these dApps and users and smart contracts? Not yet. So now we've got all the DeFi projects. Everyone's jumping on DeFi. They're all going to be bigger and better and land. Well, are they, or are the best half a dozen DeFi projects going to continue to grow and be leaders in this space? So I'll wrap it up there. I don't want to go too far into Kyle and Troy's time. If you want my daily updates and want to know what I'm doing, guys, join our group. It's the best $50 a month you'll ever spend. nuggetsnews.com.au. I'll wrap it up there. I hope you've all made a killing lately on the DeFi picks that have been in our research reports, and I hope you're enjoying it. Please be careful, stick to the rules, and I'll talk to you again soon. Cheers.